together with Mikus. Mikus is curious about what's going on in the markets, and therefore he also have prepared some nice questions. And we will look through basically what is important in the next week, what have happened in the previous week, and where we are standing with our funds, and basically all the critical questions right now regards the markets, crypto markets, and also index markets. So let's begin.
Raivo, hi, how are you?
I'm good. I just learning how to start these meetings. Always the people want to know actually what we are going to talk about. So therefore, I just try to basically those introductions, make the nice introductions. So, how do you do? Also,
Easy, yeah, thanks. I'm doing well. It's quite hot outside. Are the markets as hot as it is outside right now?
markets are typically hot, I think, except vacation time in the summer maybe. But you never know. Also, probably in this case, we will also see the bull run in the summer. Do not know yet. So therefore, because markets used to surprise when there is like less likely to happen, then it happens actually. So therefore, we can see probably the bottom of the correction maybe in the next months or so, and then actually it starts from there to run to maybe 100k Bitcoin or maybe 150k Bitcoin. So, and typically people notice only when it's already on the all-time highs and are running strongly. So, but when there is this bottom, then usually there is absolutely different environment and different news. So, but there have been quite a mixed news previously. And there have been also some dangerous news, like typically in the bearish runs, where there is some liquidity problems for exchanges, or some exchanges have to go to the court, or some crypto projects have to go to the court. So, and those have been mixed a lot also with some very, very bullish news, basically, which are, for example, that pension money is going into the crypto very soon. Also about ETFs and the ETF acceptance in the different countries like South Korea, Hong Kong, China. So, and also next week there is this decision regards the Ethereum ETF, and that should come until the 23rd of the May. Therefore, we'll see if it will be accepted, and if it will run, then basically that will mean very, very bullish for the crypto, and that can definitely trigger new all-time highs, because currently market is not valued in it yet, because the 75% thinks that it's not going to be accepted. So therefore, the surprise moment still is possible for crypto market on the bullish direction. And but we will see that next week. And in the case it's not accepted, I think there is not that much of the potential of the down move. So probably will trail in the same area as we are right now. So that's basically what I see currently on the previous weeks, and also probably in the next coming days. And there is also, of course, this economic calendar, where is a lot of news regards the macroeconomics, different basically fiat currencies, different central banks. And therefore I would like to actually, as it's Sunday, I would like to go through this calendar and show you actually which is important news and which are not that important, and which are the moving markets and which basically are not really moving markets any time. So therefore, for example, as we see in the Monday, I don't see any crucial news. There are some holidays, there are some Fed people speaking, but they are speaking basically every week. So there is nothing really important. On the Tuesday, we see also, for example, PPI from Germany, but doesn't affect that much the markets overall because that's not for the whole European Union zone or Eurozone. And then there is, for example, Canadian CPI, which is definitely important for the Canadian dollar, but not that important for anything else. If you would like to try to trade Canadian dollar against something, then it's probably important to look at it. So, and then I see, for example, on Wednesday there is something very interesting I see. For example, if you are into the Forex, then definitely you will watch this New Zealand interest rate decision. That is one thing to monitor. But then you also have to be a lot into this niche, and you have to be educated what actually is going on in the New Zealand, and actually what the central bank data shows for New Zealand and what's their policy towards this year. So, and also GBP, that means that basically Great Britain's API data, and there we see that actually we might see it moving British pound, but that's also only the British pound impact. So you can use those things if you are, for example, a momentum trader. If you like trade some surprising news, then you definitely can prepare for those moments too. So if there is some not really forecasted data coming out, then it's easy to make some money. So, and therefore this is for these can be good options also, but mostly they are not that much impacting the markets because typically those forecasted percentages are coming out. So, and then I see, for example, in United States existing home sales actually they are like also some part of inflation data and inflation monitoring because that basically shows how much money people actually have, because that's actually is how hot is the real estate market. Real estate markets also impact overall economic and shows actually how economic is basically how hot is it and how high it's running. But in overall, it's not that much impact on the US dollar or crypto. So therefore, on Thursday, I don't see anything else. Okay, this one is important. This is initial jobless claims. Jobless claims is the second factor which actually can trigger quantitative easing. If this number actually is going rapidly, that means that there is basically more and more people without a job, and that means that actually the business are slowing down, and therefore the business have to be boosted. And the one of the best ways to boost the business is to actually create cheaper money, and that means that basically decrease the interest rates, and then you can get the credit cheaper, and then you have more money in the economy, and therefore also there will be more jobs available, and more money in circulation means also more buy and sell. So basically that means that there's also more activity in general. So that is also the second part of basically interest rate decision. One part they are monitoring inflation. The second part is actually this jobless situation. So therefore, yeah.
Have you seen any data that shows a possible decrease in interest rates?
Yes, actually, the previous week there is basically was this CPI data for United States, and that came out lower than expected. The expected number was 0.4 or 0.5% per month, as I remember, and it came out actually at 0.3, and that was actually taken as a very bullish sign for the crypto market as well, because if we go to the chart, then we see that basically this data, when actually this 0.3 number came out, is here on the 15th of the May, and on the 15th of the May we actually saw increase in the price of 8%, over 8%. So, and that was definitely trigger for the market to go higher. And in the case we would have had a number higher than expected, for example 0.5%, then we definitely know would be sitting probably at 52 or 54k Bitcoin. So definitely this economic data is influencing markets a lot. Basically, those data are monitored from retail investors, they are monitored from the institutions, they are monitored from the banks, and basically everybody looks at those numbers. And also Fed chairman also speaks regards those numbers afterwards and say some comments on what might be the policy from them in the next coming of the months. So therefore, as the situation stands right now, that there is still 2 to 3 rate cut possibilities this year, probably not yet in the May or June or July, but with the September, actually it looks like the September might be the first case when we see this rate cut. So therefore it definitely aligns with the theory that basically we might have this slower bull run, actually not slower bull run than expected in the first case, because we had this really strong run up from basically 30k to 72 very quickly, and then we have slowed down, basically going sideways, and didn't go down that much also. So basically this here, when this data came out, it was pretty much likely that we were able to have this fall to 52k, and then it would be like this bull run, one of those bull run big corrections, which is actually around 30%, then we will be perfectly online with that. So but the data came out actually better than expected, and therefore we had this bump upwards. We also saw a lot of ETF inflow after this data came out. So all the institutions were actually monitoring the situation, also read this data. So that's why we saw also a lot of buys from the institutions. A lot of Bitcoin was bought on these next days after this data came out. So therefore, CPI, it's the most important currently. To the actually, it's always like you have to look on the economic situation overall, and currently the economic basically is driven by inflation, and inflation is driven by CPI. So therefore CPI is this important. And yeah, that's a good question actually from you. And if we look forward, I think we didn't finish the week yet. Basically, it was third day and jobless claims. So therefore, on the third day, basically, we will see also basically acceptance for the maybe checking out the 70k region for the Bitcoin, or we can see actually probably a little more stagnation. And also, I think that's Thursday. Which is the date actually? Oh, it's 23rd of May. So it also aligns with Ethereum ETF. So decision, Ethereum ETF decision will come out in the same day. So therefore, if we see, for example, increase in jobless claims, even a little bit increase in the jobless claims, because inflation, as we saw, is actually dropping in the previous months. So it can be so that we see also this increase in jobless claims. And if we, in the same time, see also this Ethereum ETF acceptance and the start of the trading of Ethereum ETFs, spot ETFs, then we can definitely easily run a lot higher, a lot quicker, basically, because if we will go to liquidations, and the liquidations actually show that there is billions and billions of dollars to be liquidated, or shorts to be liquidated, if we check this 72K region. So, if we get there, basically short liquidations means buying. And that means that there will be more impulse for the market to move upwards. And then we can see, for example, from here, we can see price running, skyrocketing basically a lot faster, a lot higher. We can easily reach like 85K maybe in just in 2 days, probably. So, and therefore, this is like the impulse then could be like very strong. Even we can reach maybe 90. That can be going very, very wild on here. So therefore, we will just in a minute, we will go just in a second. Basically, we will go to liquidations.
Raivo, do you remember what happened to Bitcoin when the ETFs appeared on the market?
Actually, I do not remember exactly the date, but I think when the ETFs came out, many were thinking that it will be like the sell the news event, but in reality, it turned out the opposite. Probably not in the very first day, but also in the very first day, it was like huge amount of the money were inflowing into the Bitcoin ETFs, and that was also continuing a lot in the next coming of the months and so, and therefore, and also as we standing right now, I do not remember the actually correct numbers, but this ETF for the Bitcoin is actually in the record amounts in the very short time frame. In that short time frame, there haven't been any other ETF with such large volumes. So therefore, if we see this Ethereum ETF, spot ETF accepted, then we can see then, for example, maybe next big move upwards. We can see next such a leg to the new highs. And and also, as I told you, this pension money is about to get into the crypto market too. So therefore, there is a lot of institution money basically knocking the doors right now, and also from the European banks, and therefore, and the good thing is that retail is not really yet there. Many measurements show that retail is actually not yet into the markets. Compared to the other bull runs, typically the retail was much more active when there was all-time highs. So, and the highs for the actually bull run. So if you look this data typically is used to be quite accurate, and therefore I say that we are definitely not yet anywhere near the all-time highs of the bull run. The real bull run is just beginning. Of course, it's stupid to say so when we look back to the previous summer, but still, like normally, this bull run is named after the halving. The period of the 12 months period after the halving is like called this the bull run. But as we all know, actually, it starts much earlier, where there is this bottom for the bull run, typically. So, therefore, let's see actually the liquidations.
Are you buying Bitcoin at the moment? Are you still waiting for the best day?
Actually, I'm not that much into Bitcoin itself when there is bull run. There is more about altcoins, I suppose. Bitcoin, it's more for institutions, I suppose, and also for for the longer time, like I would say, if you hold it through the actually cycles and don't sell, then it's Bitcoin is better. But if you try to catch the cycles and understand the cyclical effect, and where there can be approximately the top of the bull run and where there can be the bottom, then I think better is altcoins, because typically they perform a lot better in the bull runs. So and therefore currently I'm in altcoins, and my fund, yes, they use also Bitcoin, but not that much. Probably more for the shorting actually. That is interesting thing, because I typically have also some position which is hedging the whole portfolio. It's not meant to make money. It's meant to leverage the volatility, leverage down the volatility basically. And it actually, for example, when there is the crash, then it's seems to be making a lot of money, while the overall fund is actually decreasing a little bit, and buying and gathering the good positions for other coins. The short is actually seemingly to make a lot of money, but typically for example, then I close some short positions. Okay, I seem to be like winning something, but then later on I still, when the market recovers some parts, I still open the shorts again, and sometimes I just have them to leverage down these volatility risks. And in one case I close them with the profit, in other case I also close them with the minus. And still from here, I guess from the region of 60k, I still have a short open. Yes, it's in a minus, but the key is that actually it's leveraged down this volatility a little bit, because currently we are still on uncertainty period. We are in this range, which is more likely looking a little bit bearish and stagnation. So we never know if we will have the next leg down or not. So, and if we have one, actually, then it again takes some profit. If you don't have one, it's fine. I have more longs than shorts anyway, so it's going up and I'm still making money. So that is the interesting game regards this hedge shorting. And if you look, for example, here to those liquidations, and then we see that actually we touched the level of 67k, and there was already like billions standing for liquidations, and I think already billions have been liquidated. And that means that basically here in this region, as we didn't run much higher, there were the billions of shorts to be liquidated, and means that the price still standing there. That means basically there were also some sellers, big sellers there too. So if there are a lot of buying power from the liquidations, that means that oppositely you have to meet with the sellers. That means that probably some institutions have sold something here too. But therefore it can be so that in the next leg we will still have on the way down, not on the way up. So we might see retesting probably 63k. Yeah, if we go back down to 61, then it's maybe a little bit too bearish. Then I see that probably we can still play this level of 50-52, but we'll see. It's not about trying to bet which direction it's going. It's about risk management and applying right techniques to actually just benefit from both directions. And then, of course, also this 70-72k region, there is a lot of money standing to be liquidated. If we run up strongly, then this is the next cascade, next stairs actually for the upwards direction. where there can be this impulse for the more. And here we see basically on every $200-300 we see the billions be liquidated. So there are a lot of stop losses for the shorts. And the thing is that actually when the market runs up, those shorters, they don't want to sell, because here already they are in a big loss. Here they already are in a big loss, and they are waiting that the price is still getting back at least to the zero. So they come out with the not negative trades. But in reality, most likely they will get wrecked. They will get to be stopped out, because the market probably will have some correction, but then it continue, and they will be still open. And psychology says that they don't want to actually go out of the market with the losses. So therefore, I think they will occur a lot of liquidations. So, and that's how it works. That's about liquidations. Let's see what we have to cover next. Okay, funding rate heat map, maybe. And here we see that actually it's a lot better looking than in the, for example, when the price was somewhere there, we saw their yellow and red colors too. Especially here, we saw it very much on the red colors. But the fun fact is actually that from this prices here to actually prices right now, it's only 6% difference. But the funding rate looks completely different than it was looking then. So, and that's the brilliant point of it, because funding rate basically means how much heated market is, how much there is leveraged longs, and the more there is this imbalance with the leveraged longs and leveraged shorts, the more funding rate actually is affected. And in that case, we had a lot of longs opened, and currently there is a lot better balance, and that means there is like a lot better potential to actually build up the next leg to the upwards. And we see, for example, BTC right now standing at 7.7%, 7.07%, which is very good level. For example, if we look to some blue coins, for example, Ton coin, in one moment they were minus 156%. That means basically you get paid if you are longing Ton. And that's the beauty of it. And that basically means also that you are buying the dip, because in this moment means if there is the ton, if you're longing the ton, you actually get paid 156% per year. In that moment the rate was, so that means that everybody was shorting, everybody was short about it. And if you look to the chart, for example, let's open the ton chart.
Raivo, what is Ton? I never heard of it.
Ton coin is actually
Telegram
Telegram coin.
coin?
No, it's not any kind of very new coin. It's actually one of the best coins, one of the most promising coins for this bull run too. Because the Ton coin is a Telegram coin, and Telegram is absolutely great tool. Probably one of the best right now is the connections and everything. And there will be soon this subscription option possible in Telegram, and also there will be the Ton coin used. You will get paid by the Ton coin on the Telegram. So, and Telegram basically will use Ton coin as the money for the products and services they are offering, and also the users will be able to use it as a money providing services through Telegram. So therefore Telegram is probably one of the best projects in terms of real life applications, I would say. there can be really big stream of the transactions going through the Toncoin soon. So, and if you look to the chart, then, for example, this Toncoin 13 of May. Toncoin 13 of May. Where is 13 of May? All right, here. Yeah, so there we saw this big blue, actually, and the minus percentage for the funding rate. That's how it is. And now we see actually downwards, but we'll see next. We are up from, I think, what date is here? February. From February, we are up to 147%. That's
a nice jump.
That's, I think, a really nice jump. And if you look to the, so therefore, I think this correction is quite healthy. Currently, we touched again all-time highs. We'll see what is next for the ton. Probably some correction, then going with the other coins. And the weekly chart, it looks like there was this some kind of very bullish news for the ton on the February, probably regard these Telegram payments. Okay. Also, the volume traded increased a lot from there and is staying high also right now. Yeah, that's about what is the main things to look at regards the price movement and next possible scenarios for the Bitcoin or crypto in general. And if you look to the SP 500, which is the major index, let's check also that one. And that one is standing, okay, let's currently open Vanguard SP 500 ETF, which is actually what you can buy. You can buy SP 500, you can buy actual ETF, which is following SP 500 and buying and selling actually that stocks which are in the basket of SP 500. And there we see that basically that is on all-time highs right now. There was this correction, but we are back up on the new highs. And this run up looks a little bit like money printing, quite money printing, because quantitative easing is not happening, and probably also productivity increase is not happening. Therefore, this can be also some manipulations from the US central bank.
Yeah, that is interesting because interest rates are high at the moment, but the market is still.
Yeah, exactly. Yeah. So therefore, I suppose it's still. You can easily check it through the Fed balance sheet, and I think it's not decreasing anymore. It was increasing. And also when those, I have also saw that basically when those package deals for the wars are accepted, then also actually this balance sheet is not decreasing, that's increasing. That means that basically there is more money printed. And so that's interesting actually how this whole economic system works and where this, due to this printing, I think there is like the time is counted for the typical fiat currency because it's devolving and devolving faster and faster. So, and therefore I think there will be.
It starts slowly, then gets faster, and then like a lightning, you cannot stop it anymore.
Yeah, it's like one-way direction. You can't stop it right now, and also you can't stop it because of the many reasons. Basically, you have to pay all the pensions. You have to. Therefore, it's like very tricky actually to stop it. That's how it is. And yeah, what I wanted to say is, yeah, we are on all-time highs, but that also is not that much of the natural. What we get there, it's more about artificially we got there, I guess. And yeah,
Do you
we
also
will.
agree that, sorry, do you also agree that it will go up until the presidential election in USA?
Yeah, I think definitely. I think it's. I told it already some months ago, and I think we can easily stick to this plan. And also, we will definitely see at least one time quantitative easing before elections happens. So, and that will be most likely in September. So therefore, I think it will continue to run also higher, but let's check, for example, the initial index. Yeah, as you can see, and basically it's very good investment. If you go to the SP 500 with some leverage, easy money, And but if you see, okay, if you are not lucky, you went in here, it starts dropping. Basically, if you have some experience, then it's not your money that you have to use today and not tomorrow or this month or next month. Then all you can do if it's going down is buy more. So you bought something here, then you buy something here, then you buy something here, then you buy double amount here, triple amount here probably, and then sooner or later it will be moved to other direction. And one more very interesting thing is that when the price was here, there were stupid news, absolutely stupid news from, for example, largest Wall Street banks, largest banks in the world, where like there were headlines telling that JP Morgan sees SP 500 down to 4,700. There was like, yeah, basically I think, or some other largest banks, something like this news, like stupid news. And I don't see it any other way than just like trap for retail traders, because they also want to make money, and this like financial world is so shitty, so full of scams. And also, if you look to this homepage, okay, this data is fine, but you can get this data if you are a little bit of the insider. You can get this data some minutes before actually it shows here. And and here I would like to say that this news, for example, investing.com or Finviz or any other, which are like Bloomberg or something else, which are like kind of the most prominent and probably the most reliable, are actually also a lot manipulated. You can probably see 80-90% of the correct news, but then there are the times when actually those institutions want to make some profits or correct some losses, I would say. So, and then the Morgan Stanley or JP Morgan or some other bank comes up with some kind of analysis that says that we see SP 500 down to 4,500, 4,700 or something. And why they are doing that? Because they need liquidity to actually buy in large positions. If they, for example, the market is dropping and they were considering that they want to actually turn the market here around, and they want to actually come in the market with the large sums of money, they need actually the seller here. They need also large sums of sell here to actually buy the stock in this region. Because if there is not a seller against, and they are just starting to buy in large positions, then the market runs very quickly up until actually this buy volume is fulfilled, until we have found a lot, until we have found the same amount of sellers. So to actually trigger the sales volume and to build up the sales volume is easiest is to manipulate the news, and the retail then jumps in and start to short the market. Basically, they start to short the market from here, and that is pretty good volume for the institutions to buy in with the large sums here. And then we just basically they rob the retail here, and that's how it is. Therefore, it's not about predicting what happens next. It's about using this stupidity in your advantage. That's what we do in our funds, and therefore our funds, for example, last months is up 12.87%, while actually Bitcoin is down 12%, and there is like a lot of altcoins which are down 20, 30, and some even 60%. So, but in the same time, our fund is up 12.87%. So that is definitely great. And we are basically using this thing that actually there is a lot of manipulation, a lot of bots playing against each other, and therefore we always see market running. Like this, up and down, up and down, up and down, up and down. And if we like analyze a little bit past, then we see that basically for XP 500, we never see drops over, I don't know how there is like from year 19, but okay, whatever. So here is 27%. I think here was the COVID. There's 35%. And if you build a strategy which basically is ready for like 30, 40, 50% drop, then you are like saved. You are saved for the all of the time. And our projections actually shows then you can make a lot more with such a strategy as we do than actually market itself provides. For example, we can go to quickly to hourly chart in a Bitcoin, for example, and test our strategy. Let's open this one. And there we see the result basically of our strategy. This is projection line for our fund. And that is the period of, this is actually 1 year and 4 months. And that's how the over chart looks like. So, and that's also seen in our fund. Let's quickly check. For example, this is the beginning when it started to run. And yeah, it seems like a little bit volatile but it's only because it's only the 1 month of the time. So when we will see this going for the year or over the year, we will start to see also this geometric progression and compound interest to start work, as we see a little bit here. So yeah, that's basically our philosophy of the markets. And if you see, for example, large drop or something, then also there is hedging options always. You know, if there is this moving or news or anything in the world is looking like that there can be some next COVID or next wars or something, then it's easily you can also open some hedge positions. And with the hedge positions, it doesn't matter. They are basically to leverage your move on the downwards. It's not about making money, it's about saving the money you have made. So therefore it's not about closing the